BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets are off the day's high. The Nifty trades flat as banking stocks underperform. Early sectoral gainers like metals and IT too have given up the gains. Yes Bank is the top loser on Nifty for the third straight day. The lender is now down 20% in last three sessions. IndusInd Bank's net profit misses estimates as provisions rise 41% sequentially. Asset quality is stable while the stock trades at the highest point of the day. And Wipro is the other Nifty company that will report its earnings today, and the stock is trading flat just ahead of the results. Good afternoon, Neeraj. Some selling pressure coming, or maybe call it profit booking at higher levels.
Yeah, or the effect of the yields as well, Navneet, which will be playing in on the banks because they are the only culprits which are correcting. Though you would have to say that compared to the rest of the world and rest of the Asian markets, the Indian markets are trading a bit lower. The Bank Nifty 2 coming off. Before we get, let's get the heat map, and then I want the intraday of the stock of IndusInd Bank as well. There's a bit of a crack that came in the last few minutes. Yes Bank is down 9.5%, by the way. That's the top sob story if you're looking at the banking space and what's correcting. So this one stands out. The likes of Kotak, etc. too have corrected, and I want to get in IndusInd Bank because I reckon the intraday would be important, and then we'll get to the gainers too. But if I can get the intraday of IndusInd Bank on the screen and look at this fall that has happened, this is mirroring what happened to the Bank Nifty as well. I think the figure floating around, and we're still trying to ascertain that number, is that the slippages are higher than what was expected by the market, and maybe that is leading to IndusInd Bank doing what it is doing. 1535 from highs of about 1565 or 1570 or thereabouts. So it's been a sharp drawdown into IndusInd Bank. We're still awaiting that number, so I can't confirm it for you, but I think that's what the word in the rooms, dealing room seems to be, that the slippages number is much higher than what the expectations were for IndusInd Bank. We are trying to get the press ascertain from the press release as well if that has happened, but that seems to be the reason why this one is doing what it is doing. Metal names are doing okay as the heat map suggested, so that's the set of stocks on the large cap at the broader end of the spectrum which are doing okay for themselves. If we can get the broader end of the spectrum moves and look at the kind of gains that Tata Global Beverages is having, 8% higher in trade, and a clutch of others in the cement space, sugar, etc., which are doing well. So there is Dalmia Bharat, which has gained another 3% in the session today. Mindtree on the results day up about 2.5%. Godrej Agrovet about 4% higher in trade. What's not doing well? Prestige down about 1%. Engineers India down about 1%. Aditya Birla Capital takes a bit of a backseat. Ineos Ventures down about 3%. That's the big one which has corrected. And at the small cap end of the market as well, we should just pull up some stocks and let's see what's happening in the mid cap and the small cap space in particular. TV18 Broadcast second and not doing well. And I mentioned cement. Look at India Cements too, up about 6.5% in trade. So really strong show. There's strength in Karnataka Bank about 2.5% too. What's not doing well? Sobha pulls back a little bit. DHFL and some of the others, and Delta Corp corrects 4% after a lackluster quarter. But IndusInd Bank, Yes Bank, clearly the key movers at the large cap and the banking space. Navneet, I wonder what the F&O activity out there is, but how the overall liquid universe looking like? Well,
Neeraj, definitely profit taking coming at higher levels. Remember, we opened in the red. There was some recovery. Nifty also made fresh highs in today's trade, but you are seeing some bit of addition today coming by. Nifty just about flattish, so I don't think there is anything to worry right now. But for Nifty Bank, which has been witnessing unwinding in the last 2 or 3 sessions, has finally seen some bit of fresh positions also coming by. The premium is somewhere about 60, 65. Remember what's been supporting our markets throughout the day today, at least a while back, India VIX was trading with cuts of about 1.5% to 2%, and that's still maintained. So there is no major movement that we are seeing for India VIX. So lower levels definitely support the markets at these higher levels. In terms of range then for the options data, we have seen the put writing at the 12,300. Remember, we are trading above that mark. Nearly 16 lakh shares have been added there. And yesterday also we saw addition of nearly 11 lakh shares. So current premium at 40 rupees if somebody is writing this strike, so that trader is pretty much safe till the time Nifty trades at levels of 12,260 thereabout. But first support for the index is at 12,200. Keep that in mind. 12,350 put has also been active, added about 10 lakh shares. And on the call side, you've got the 12,350 call, which has seen a maximum open interest addition so far. So I think the bulls and the bears will once again fight for that level of 11,300. On the stock futures front, a lot of stocks to keep an eye on. on. Tata Global Beverages, we've been highlighting since morning. It's been hitting fresh highs for the last 3 or 4 days. And there is significant surge that has come in with regard to the open interest today. So if the futures will come up on your screen, 71%. It's not a normal increase that you see on daily basis. And once again, the stock's sitting at day's high. It's up 8 to 8.5%. Even at these higher levels, traders are betting on the long side, and the volumes too have been pretty much decent on the cash side. Mindtree is the other one ahead of the numbers. The stock's sitting with some bit of gains. Futures activity also indicating some long positions coming ahead of the numbers for the month as well. The stock's given you returns of about nearly 7%. The futures open interest up about 26 to 27%. And Yes Bank, a stock which is down now 20% in last 3 sessions. It may come out of the F&O ban for tomorrow's trade, and that's what the data has been indicating. If you looked at the total open interest as a percentage of market-wide position limit as of yesterday, was 81%, and for a stock to come out of the F&O ban, it has to fall below that 80% mark. So the unwinding will take place today on both futures and options side, and if that happens, you might see Yes Bank coming out of the F&O ban tomorrow. But the stock, Neeraj, is seeing significant selling. It's at day's low with cuts of 9. It's fallen below that level of 40 now.
Yeah, and well, some people might say not surprising, but yes, there is some pain. And it's not just today's pain, by the way, in Yes Bank. I think it's now continued over the last few days. We've refrained from talking too much about this because I think a lot of individual investors get caught into buying some of these names without quite knowing the full fundamentals, and therefore best not to speak too much. But yeah, the stock has corrected, and therefore worth
just
mentioning.
A word on the slippages number. I think for IndusInd Bank, it's come in at 1945 versus 1102, which was seen in the September quarter. So slippage ratio is at 3.75% at the end of December quarter versus 2.24, which was seen at the end of September quarter. So sequentially, the slippages ratio has gone up, and they've given some breakup also in their press release where they've said slippages above 100 crore includes from a travel company, which is at 282 crore, and also from a diversified group of 3 stressed accounts, which is 250, which they, by the way, highlighted it's fully recovered. And there is 177 crore, which has come from a paper company. So net overall slippage ratio by the end of December quarter has gone up. And I think you were right, the stock slipped because of that. And remember, we went into the IndusInd Bank earnings with good amount of gains yesterday as well.
Yeah, there was some bit of covering in the second half of trade. The other bit, Navneet, I don't think they've really increased the provisions as much.
53%. So it's from 50% last quarter 53. To now it's 53. It's still lower than SBI, ICICI compared to any bank which has been doing well.
Yeah, I don't know if the markets will take these well, but let's wait and watch. I think the press will throw more details, and we'll get to that in a bit. Let's get in a market voice. Rakshit Ranjan of Marcellus Investment Managers joins us right now on the show. Rakshit, good having you. Thanks for joining in. I know you guys look at bottom-up companies, etc., but we're in the thick of earnings, and I'm just wondering, what's your assumption of how much would the current earnings season impact the market sentiment? Because we started off on the right foot with the IT companies, at least the 2 or 3 that came out doing okay, and so far so good, but question marks remain over what the rest of the season could do.
Yeah, I mean, I don't think there are any clear signs of the external environment becoming substantially positive anytime soon. So bearing that in mind, I don't have too many high expectations from the ongoing earnings season. Whether that impacts sentiment very badly or not, we'll have to wait and watch, because these are non-fundamental factors, sentiment and stuff, which can't be really predicted. So yeah, as you said, we do bottoms-up approach towards stock picking, regardless of what the external market environment or the sentiment around the broader market is.
So I'm just wondering, I'm not asking you to maybe give me a call, but I'm just trying to compare. You guys have the 2 well-performed, consistent compounding banking stocks within your portfolios. When you compare them to, say, the likes of an IndusInd Bank, I'm not getting a Yes Bank into the conversation, but say an IndusInd Bank or some of the others, what tilts the favor against, say, a name like an IndusInd or an Axis, but I'm using specifically IndusInd because it's in news right now, compared to the ones that you choose in your portfolios?
So the ones that we choose in our portfolios have a lot better asset quality side of the balance sheet, and as a result, their earnings profile is a lot more consistent and a lot healthier. More importantly, they also have access to a lot greater quantum of low-cost funding on the liability side of the balance sheet. So both cost of funding as well as access of funding, the liquidity aspect is pretty robust on the liability side of the balance sheet. So those are two main differences versus the rest of the sector or one or two banks that you named. So the banks in our portfolio are HDFC Bank and Kotak. I'm talking about those two. Also, the NBFC which we have, which is Bajaj Finance in the portfolio, also mirrors similar strengths. Now, if you look at how things might pan out over the next 3, 4, 5 years in the banking sector, I think given the absence of surplus liquidity available on the liability side, part of the lending universe, and the example of Yes Bank, that's one example, and some longer list of plays which don't have enough firepower to lend at aggressive rates, as in aggressive growth rates over the next, say, 3, 4, 5 years. In that sort of an environment, the kinds of banks that or NBFCs that we have in our portfolio, where you've actually got pretty well-funded liability side, low cost, and at the same time high control on the asset side of the balance sheet. These types of lenders, I think, will play a dominant part in consolidation of the lending universe over the next 3, 4 years. I'm not saying there won't be other banks. I'm not saying IndusInd won't be taking part in consolidation. It's just that it will be a disproportionate gain for an HDFC Bank or a Kotak or a Bajaj over the next, say, 2, 3, 4 years, given the weakness of their competitors when it comes to accelerating lending in a disciplined manner.
Okay, that's about the banking space. Remember, you had Bandhan Bank also, which came out with the numbers where sequentially there was a bit of deterioration, which was visible in terms of asset quality, and also provisions for the quarter were on the higher side. But the stock seems to have recovered from that blip which came in just after the numbers. So some probably buying coming in at lower levels. Bandhan Bank at 515. The other stock that we've been highlighting since morning is Tata Global Beverages. Well, incremental gains continue here. It's at life highs, sitting at the highest point of the day as well. And not to forget the futures activity to a significant increase seen when it comes to the open interest build-up, which is clearly telling you even at these live high levels, maybe traders are betting even for higher levels. So it's into the uncharted territory. Hi, Rakshit, good afternoon. Do you have something like Tata Global Beverages in the portfolio? The recent development is just that they've got NCLT approval for merger of Tata Chemicals consumer business with itself. And now the analysts have been mentioning that this will be the FMCG company of the Tata Group. They changed the name from TGBL to Tata Consumer later. In terms of valuation, now at live high levels, of course, there is some catch-up which has already happened. I think FI 1 year forward earning, now it's trading somewhere about 42 to 43. How should one look at this stock now?
So we don't have Tata Global in our portfolio. We don't even have it in our coverage universe. The main reason why we don't look at it is if you look at its history has been pretty volatile in terms of fundamental performance. Even the capital allocation decisions that this firm has taken, not all of them have delivered a healthy outcome in terms of returns on capital on the incremental capital deployed in various acquisitions that they've done abroad. So bearing that in mind, if we don't have enough evidence of consistent compounding in the history for, let's say, 10, 15 years, we choose not to look at such stocks, because that increases the risk involved in investing. What we instead would love to do is, so we do have a couple of FMCG names in our portfolio. We do have a couple of discretionary consumer names in our portfolio, but everywhere our main aim is to crush risk And one way in which we crush fundamental risk or the risk of volatile fundamentals is by not considering companies which have not yet proven themselves on consistent compounding. That's one area where Tata Global fails the parameters that we look at.
Okay, but for the time being, Tata Global Beverages continues to do well. Rakshit, the focus shifts to Union Budget on 1st of February. Would you guys take any tactical bets ahead of that? Any event-based bets?
No, we don't take such event-based bets. However, one thing we are quite clear of is that in a difficult environment, in a difficult external environment, most of the benefit of the consistent compounders that we have in our portfolio comes from the difficulties faced by their competitors. More importantly, whenever the government tries to give us stimulus, the companies in our portfolio, I'm assuming that there is hope for some stimulus in the budget, and there might be some stimulus. We'll wait and see. But even, for instance, 3-4 months back, when the finance minister came out with corporate tax rate cuts, such actions have a disproportionately bigger benefit on companies which are in a stronger position to capitalize on the opportunity thrown out by such events. So in that event, as a result, if the budget proves to be any significant game changer for the external environment, then I think staying put with the portfolio that we already have is going to reap far better gains than trying to speculate on which company to buy ahead of the budget. Hoping for some sort of a turnaround in its fundamentals after the budget.
All right, Rakshit, we leave it on that note. Appreciate you joining us and taking us through your views, but we'll cut across to the management of IndusInd Bank, who's addressing the media on their numbers.
We've been saying for a while now that we are beginning to see the interest engine not only humming but also revving up nicely. So I think on the back of a pretty robust net interest income growth of almost 34%. We saw our interest margin improving by another 5 basis points. So this is the third consecutive quarter that our NIM has improved by 5 basis points. And we moved up from less than 4% to now a number of 4.15%. So the interest figure is moved up pretty nicely and smartly. Our fee continues to go apace and has grown as much as 22% during the quarter, in line with the growth that we have seen in the past. And I think the big highlight for us in the quarter is the operating profit. I think we have a new high on the operating profit, which grew by 30% year on year. But I think more importantly, the number to watch is the percentage of the operating profit on total assets. And I think at 3.83%, it probably be amongst the highest in the industry. I think that is one of the big ones. This thing, our consolidated PAT came at 1,309 crores. And this was after we made accelerated provisioning for raising our provision coverage ratio. I don't know whether you remember in Q3 also we had done some accelerated provisioning to raise our PCR. And it has now moved up from the low of 43% to 53%. So a 10% improvement in the PCR over the last 2 quarters. And if you were not to take the accelerated provisioning, then the profit for the quarter was 1,497 crores, which is a growth of 52%. With the provisioning, the growth is 33%. NIM I already talked about. Our balance sheet footage crossed the 3 trillion mark, and our loan book crossed the 2 trillion mark, 2 lakh crores as well. Credit growth was up 20%. I will tell you the components of the credit growth. Deposit growth was up 23%. And PCR we've talked about. The loan book has remained stable. Gross NPA improved slightly. Net NPA improved significantly to 1.05%. and we have kept capital adequacy at a high of 15.43%, including the profit for the quarter. The client base, in the headline, the client base is now 25 million, and during the quarter, the client base actually went up by 2 million. So overall, I think a pretty strong quarter all around. I'll take you through some of the other features. NIM I've already talked about. The breakup of the corporate growth, I think the loan book growth, I think that's something that we want to talk about. So our microfinance businesses, which had slowed in quarter two, if you remember, are back to full momentum. Quarter two, we had talked about, some floods and all in some of the states, so they're back. And we saw a quarter-on-quarter growth of 10% and a year-on-year growth of 44% in our book, a microfinance book. Our vehicle finance book grew by 16% compared to the industry, which actually shrank overall. Our non-vehicle retail book grew by 17%. The corporate book grew by, I think, 7%? 8%. Corporate book grew by almost. We've had some very significant prepayments as well as recoveries during the quarter. I will show you a slide which actually shows you, the so-called stressed accounts that people keep talking about, and we monitor that. And if you were to include the recoveries that we have had, then I think the growth cumulatively comes to about 23%. The loan book growth comes to 23%. So let's show you that slide 18. That's your market. This one. Yeah. So these were, these so-called stressed accounts. They were never non-performing in our books. And if you recall that at the peak in quarter 4 of last year, these are accounted for about 1.9% of our book. It has now fallen to 0.4% of our book. So I think this is the last time that we are going to show you this slide, because by end of next quarter it may not be a meaningful slide to actually show. And this has been a combination of recoveries, repayments, prepayments, some sales to ARCs, and some write-offs as well as happened during this thing. But whatever is residual is also covered pretty securely. I think we have security cover of almost 169%. So much discussion around the NBFC sector and the exposures. I think the next slide actually covers that. So our loans to NBFCs, other than the HFCs, have actually come down to 3.2% of the total loan book. It was 3.7% in the previous quarter. And I think what this slide shows is that the portfolio is spread across our entities which have very strong sponsors and with solid pedigree, and typically they are in niche retail businesses. And I think the resilience of this portfolio is reflected in the SMA2 data, which we also show you, which shows that although the sector faces a tough operating environment, our book has held up pretty nicely along that thing. Maybe we'll also show you the SMA2 data, which is the next slide. No, aage. Yeah, this one. So I think pretty steady this thing. Our SMA2 is about 53 basis points. And you see that they're very small numbers in the areas or sectors which people do express some concern. And they are spread out across a number of smaller sort of accounts. I think we can show the breakup of the fee. 24. No, पीछे, 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 और पीछे. Fee. One more slide. Yeah, this one. Yeah. So that's the breakup of the fee. The fee grew 22%, and even if you take just the core fee, which is a client-linked fee, that also grew about 19 odd percent. The credit cost for the quarter was 28 basis points, and the credit cost for 9 months now comes to about 59 basis points. Gross and net NPA numbers we have talked about. Maybe we'll just show you the yield figure of 27, the 27 slide. Mm-hmm. Yeah, the 27. That's how the yields stack up, and that's how the division between the corporate and the retail book actually figures out. Okay, I think that's the headline numbers. More than happy to take questions.
You mentioned in your commentary about the advances growth that you've seen some prepayments and recoveries. Could you throw some more light as to what is the extent of these prepayments and recoveries, and is it primarily because people want to deleverage their book, or is there some kind of effort from the bank's end to try and take money out before the company goes into any kind of stress?
No, we are not talking about the repayments in the normal course of business. That's not what. We're talking about recoveries, from the so-called stressed accounts. I think those are the ones we're talking about. Normal repayments are part of your BAU. Loans get repaid, fresh loans get disbursed, and all that. I'm talking about those where special efforts were made for getting the recoveries done. So those numbers, if you add back, then I think the loan book growth would be about 22-23%.
Where is the stress actually coming from?
No, actually, if you see net slippages, there's hardly any movement. Actually, net slippages are better than last year at 42 basis points. And net slippages last year was 46 basis points. Quarter on quarter, there's a slight increase. Actually, it's flat almost, or 3 or 4 or 5 basis points increase. And that's only happened because a particular travel-related account was recognized. You can figure out the name. It's so easy to figure out. That's about it.
What has been the exposure to the travel account that you mentioned?
Exposures we don't need to mention.
Is it in...
You will never get that number. Significant. That's why you're seeing they were enough to depress our loan growth. You understand? We're saying that loan growth should actually have been about 22 or 23%. And we actually came at 20%. We are happy with the 20% because we're happy that the recoveries and repayments happened. So I don't know whether you missed that particular slide when we showed the how that so-called stress book has fallen over the last 3 quarters from a high of 1.9% down to 0.4%. And that's why we're saying this is the last time we're going to show this slide. We don't need to show it next quarter.
So how did you recover these loans? In the sense, is this sale of collateral, or was it, these loans were paid back, or, what happened? Did you sell some loans?
It's a combination of repayments, that means honoring of commitments, some sale to ARCs, or enforcement of securities. Have you given amounts anywhere?
Yeah, we've got a slide on that.
Yeah, we can show you the slide.
The 1,000 crores of reduction.
This is on slide 25, I think. So it's a combination of these factors, 3, 4 things that have happened. You see the note down there. upgrades, recoveries, sale to ARCs, everything put together. You couldn't have asked for better numbers, right? More transparent numbers.
So the macro numbers have not been that great. I mean, we've seen the numbers. Inflation is high now. Also, it's not a good number. How are you, coping with that? What's your? Do you think that there could be new stress coming up? Some light on, how do you see business because of this macro environment? I know that it doesn't reflect in your numbers right now, but this quarter, I don't know how it's been for other banks, basically.
No, I think overall you're right that the operating environment is sort of as tough as it gets. So people do give some anecdotal evidence of green shoots here and there. For instance, in the commercial vehicle industry, we saw one senior executive of one of the large manufacturers actually say that the inquiries for new vehicles have actually increased. So that's I think a decent beginning. Whether you are seeing green shoots or not, I don't think it's very early days to actually say that there's a universal sort of a rising. But there is evidence that I think there's stabilization of activity at lower levels. So the level has come down, but it still looks like there is a stabilization of activity at lower level. I think that as far as the sectoral stresses are concerned, a lot of discussion and talk has happened about a couple of sectors where expectations were that there would be more stress and pain. It doesn't seem to be playing out, in the sense that neither the NBFC sector nor to that extent, barring a few cases here and there on the real estate sector, we have not seen that sort of, there are no signs at all of any form of blowout and things like that. But I think there is the BAU, few names that may sort of fall by the wayside. One of the reasons, we think one of the reasons why this whole story has become a story of demand, a shortage of demand versus normally a shortage of supply. India has always faced a supply shortfall, and suddenly we have a demand shortfall. So there are a variety of things. People ascribe it many reasons to it, demon, GST, and all those sort of things, higher level of compliance, and those of things. But I think one of the sectors, one of the reasons, main reasons I feel, is because of the slowdown in the financial sector. And I think the slowdown in the NBFC sector in specific. And we believe that to revive consumption demand, you have to have a much more healthier financial sector. And the NBFC sectors must come back into the role that they played in the past. They were fueling consumption demands. They were financing the white goods and things like that. And suddenly they are out of the market. So I think one of the factors that has to play, and there is evidence that the flow of credit to the NBFC sector is no longer falling. In fact, there is some evidence.
Flow of credit to the NBFC sector is up more than 20%. And if you see the spate of recent foreign currency bonds by a few of the players, I think there's some of that impact that was felt by the mutual funds reducing exposure is being taken up by the banks and also by foreign currency bonds. So things are looking up now, gradually.
You have also mentioned about fraud of two entities in notes to accounts. How much is the provision made for that and what is it about? Can you throw some light?
Yeah, I think we made 240 crores of provision on that. So we made provision as per regulatory requirements. So we have preempted that in terms of recognizing them as frauds. Proactively, we have done that. And we made this provision of 240 crores. I think we mentioned it somewhere.
Yeah.
240 crores. No. we made provision as per regulatory requirements. There will be provisions in quarters to come as well. So it's not a one-time. But what we did was to take the bull by the horns and said, okay, we will recognize them. That's it. Sorry?
Is it the housing finance company which has been, has that been declared as fraud this quarter? No, because because that depends the accelerated provisioning that you have.
Yeah, we've just said two names. I think we'll stick to that. We will not give any names.
No, but the provisioning.
No. See, the declaration of fraud is with the banks. The first phase of this thing is a red flag account. Second phase of this is the forensic, and the forensic indicates that there is a thing. Then it's up to individual banks to classify them as frauds. So individual banks can take the decision of classifying as fraud. That's why we have done. Now whether others follow or not follow, we've got to see. We are the first to declare results. So let's see what the others do.
Mr. Sopti, if you could go to slide 25 of your investor presentation, where you're saying you've provided 250 crores for the infra NBFC. Was it provided in this current quarter, and how much is left to provide? Sorry if you've already answered that.
So, this is the infra.
Yeah, ILNFS, yes.
So, we have steadily provided, and you remember if you figure which to be 3,000 odd crores, and every quarter we make extra provisions. So we have done this quarter. So we've done two things. We made an extra provision of 250 crores, and we've also done a write-off of 250 crores.
So this provides for how much coverage against the total exposure towards the NBFC?
I think the exposure has gone up from, in March 2019, our provision coverage was 55%.
Okay.
And it's now gone up close to 75%.
Okay. You've also adjusted 75% against reserves for the housing finance companies' exposure in those three rumored groups, so to speak. Could you clarify if you've drawn from reserves?
So that's why if you declare it as a fraud, you recognize it fully from reserves, and then you debit your P&L to the extent of 25%. So you spread it over 4 quarters.
So the quantum of loans which have to be declared as fraud.
Right, that's of course IndusInd Bank, and we'll keep on getting you snippets of that conversation, but suffice to say the stock price reaction says it all. The market not quite happy with the slippages. There's a lot of chatter around the loan growth numbers as well, that they have come in at 20% and below estimates. I think our estimates, or the Bloomberg estimates, were about 21, or not the heightened 30% that maybe some people in the street had, but there was some chatter on the street about that too, and as a result of that, the stock has come off 2.5% lower. We'll get in a fundamental expert on board in just moments from now to try and talk about this, and then of course get in a chart perspective too. But IndusInd Bank has certainly come off quite rapidly. Just firstly an update on IndusInd Bank fundamentally, and then we'll get into the technical positions as well. Dharmesh Kant of IndiaNivesh is with us as well. Dharmesh, good afternoon. Thanks for joining in. What do you make of this commentary, some of it which you would have heard Ramesh Sopti as well speak about? Loan growth 20, slippages much higher, and the provision coverage not really increased dramatically. Yes, has gone up, but nothing to the tune of what some of the other peers are still doing. There's some bit of pressure on the stock today.
Yeah, good afternoon, Neeraj. See, if you look at the history of IndusInd Bank, as far as when they report their earnings, it always is the trend that after the earnings are being reported, they undergo a profit taking, and before that there's a build up in the stock. So this has more to do with the trading pattern of IndusInd Bank, which we are witnessing on the screen as of now. I haven't heard the entire presentation of Mr. Sopti, but whatever I have gathered is the number looks pretty good. Slippages are a bit higher, a tad bit higher, and that is reflective of what is happening in the economy as of now, and that is what I expect for the public sector banks to report this time a higher NPAs as well. But the way their books have grown, especially the corporate loan book growing by 8%, is quite heartening. At the same time, I think though the economy may not be completely on the mend, the green shoots may not be totally out there, but this is indicative of the green shoots being there. To my mind, if there is any correction in the IndusInd Bank because of some trading activity happening, one should be buying into that, because if you look at the NPA levels, that remain fairly stable. At the same time, the profitability growth is very good. NI has increased substantially, and there has been improvement if NIM, the net interest margin, on a Y basis. So on all counts, IndusInd Bank has delivered a good set of numbers. Only the slippage has been the concern, and estimates are okay, fine, but if a company is compounding its book value by over 20-25%, then why not buy it? Because by FY22, if you discount the numbers of today, it would be reporting a book value of more than 550 or 575 thereabout. And even if you give the present multiples of 4x price to book value, the price comes out to be 2100 kind of a target price. So 1500 is trading as of now. And next quarter onwards, FY22 estimates would be rolled out by most of the analysts. So to my mind, it's a good buy on any decline if it happens in IndusInd Bank. The numbers are quite stable, and I think it's a good time to get into it.
Okay, that's Dharmesh's view on IndusInd Bank. And remember, the NIMs have improved due to the high-yielding MFI book, which is coming after the merger of Bharat Financial. So that's something which is given that fillip to the NIMs for the quarter gone by. And also the commercial vehicle business, they've said that that book grew by about 15%, non-vehicle business book grew by about 17%, and the corporate book for the quarter gone by grew by about between 7 to 8%. In fact, talking about the loan growth, Ramesh Sopti also said if one were to include prepayments and recoveries, then the loan book would have grown by about closer to 23% vis-a-vis what they've posted actually of 20%. Nevertheless, there's no recovery actually which is coming in at lower levels, and one has to keep in mind what Dharmesh also said, that ahead of the numbers there was some buying which came in, so maybe those positions are also getting unbound. Well, shifting focus to technicals then, we've got Amar Singh of Angel Broking who joins us on the show now, and also Sacchitanand Uttekar of Tradebulls. Good afternoon to both of you. Amar, let me come to you at these levels on Nifty Bank. Are you taking any fresh position?
Yeah, I would say that at the current levels, not at the current levels, but we've been on the long side in Nifty for quite some time, but at the same time, slightly on the cautious side, because what we are seeing is that on the upside, Nifty bank futures has got very strong resistance coming around 12,400, 430 zone, whereas on the downside support is around 12,250. And technically what we are seeing is that the daily charts, which I had mentioned earlier, also we're seeing some sort of bearish divergence. So one needs to be slightly cautious, but looking at the intermediate term trend, long term trend, that continues to remain positive. Also, we are seeing that the volatility has also overall India VIX that has increased, so one should be slightly cautious, but yes, dips should be used as buying opportunity.
Sacchitanand, what about you? Are you taking any bets? What's the call on Nifty?
Well, good afternoon. For Nifty and Bank Nifty, I think both should be on the long side. So if you look at Nifty per se, since last 5 trading sessions, we have never seen Nifty going below its previous day's swing low. Even in today's session, we did see a drift, a minor drift toward the lower end, but again, the index has recovered. Even if you look at the sector rotation, it looks very promising that we may see even Nifty rising towards the upper end of the broadening formation, which is placed somewhere close to 12,460. So with that intention, long should be maintained. It can be added as well with a stop loss close to 12,320 on futures. If you look at Bank Nifty as well, until unless we don't see Bank Nifty, breaking 32,000, I think the bias stays on the positive side. We do have a minor hurdle somewhere close to 32,300, but eventually I see that particular level also getting breached, and probably we may see an extended rally towards 32,500 on a positional basis. So even right now, I think it will be prudent to create some long positions in Bank Nifty. The stop loss for the trade should be placed at 31,970. The first target would be somewhere close to 32,300, where we need to review how the momentum is building in.
Right, Nifty is at the highest point of the day, but shifting focus to earnings, Bandhan Bank has made an additional provisioning of 200 crore on account of the possible hit it might have to take on account of violence in Northeast. But the bank CEO and MD, Chandrasekhar Ghosh, says such one-offs are part of the microfinance business. Speaking to Shafali Malik, he says the repayment schedule should improve in 2 to 3 weeks.
If you see that, yes, the microcredit level every states in the sometimes it will be come on that, and it is not anything exceptional on that point of view. So that our presentation is given on that. If you come to this, the issue of total of the bank as a on-time repayment rate as on 31st December 2019, it is in seeing that the 98.10% has come. This is very good on that. So if it is go to this Assam, it is a 93.64% of the on-time repayment, which every individual customer are eligible to pay the one installment in that day, and they have given on that. So in that sense on that, but if you see in that the earlier the 1 month before, it was in a 98% of that the Assam. It has been gradually come down in some that the incident of that, and that is coming down in the 78%. Again, it has been within a 2 weeks has come up in the 93.64%. So we expect on that another couple of weeks it will become to this normal position.
So in Q4 as well, do we expect some amount of additional provisioning to be made on account of Assam portfolio?
No, we have not seen in that much, but we see that because of we are voluntarily 200 crores are given that the provision just to keep in a special provision on the standard asset, and we checked on that this quarter. If something is happened, and then we can be like to use that money.
So, sir, that's Assam. Let's shift focus to another state, West Bengal, because there are reports suggesting that perhaps there is a crisis brewing in that state as well. I saw a headline just today morning that perhaps that may be triggered by Bandhan Bank. Now, that's quite a statement. Are there huge concerns of over-leveraging there? And what is it that you have to say to the shareholders on those kind of statements coming in?
No, if you see that in the West Bengal, we are working in the last 19 years. So this is not in a very new portfolio, just I have been started that area. We have been last 19 years, we have the best experience. We got it in a Northeast and West Bengal. So in that sense, I have not feel anything, whatever the comments as given by people, I have not seen on that any issue on that. But if you see that my West Bengal portfolio till now, it is a 98.64% on-time repayment rate, though some of the people are talking about is a unrest on that. There is no unrest in a West Bengal. I have not seen in my life. And this, if you see that the 19 years, I have the many government I have been seen, and for that reason I have the good experience of that. And West Bengal has the market for small and medium enterprise and huge on that, and that opportunities the people are getting the credit from us, and they are repaying and that going their business, and that is the point of that. If you see that the 19 years, one of the borrower have been taken 3,000 rupees has come to the 80,000. So we may be surprised is 80,000. But if you go to this, people are seeing that the 19 years in the how much business they have been diversified, and they have been build up their business in a good way. So that is also like to look it, and then we'll be like to comments on this. I am very confident on that. West Bengal portfolio is the best in the country.
The merged numbers a little better. How would you split the incremental growth that has come in from the Bandhan original portfolio and from the Grah Finance portfolio, and also in terms of the NPAs? Where are the maximum slippages coming in from which portfolio?
There is two factors on that. Actually, the portfolio growth has come the 88%, but out of that, if we see that because of the merger, if we not consider the merger, it's actually my growth has come 33% of the advance growth on that. If I come to this, the slippage point of view, one slippage has come because of the Gruho merger. And because if you see that the Gruho before of merger, they were under the HFC. So HFC rule of identifying the NPA and banking rule of identifying the NPA is a different. For that reason, it is coming to different little bit. But other than this, there is no that such of this anything increase of the NPA of the bank.
Okay, so from here on, what is the likely trajectory ahead, both for loan portfolio and the deposit portfolio as well, and the margins as well, because the margins have come off to closer to 8% now. So how is it that you see these metrics going forward?
No, if you see that in the last quarter it was also 8.1. This quarter has come to the 7.9 and nearly 8. We feel that it will be like to stabilized on that way.
Okay.
And this has come after the merger.
Okay, so any ballpark numbers that we can work with in terms of loan growth and deposit growth?
No, I have not seen anything, and that the demand is not coming. If you say that the advance growth has come 33%, we are conservative in this time because many of the people talking about Northeast or they are talking about that the economy growth is coming down, so that we are conservatively growing in the advance book in the last quarter, and some of the flood also has come for that reason on that. But I hope that this quarter again it will become as a normal, because always in the last quarter is coming differently from the last 3 quarters. So this quarter again it will become to this the normal position on this. The deposit point of view, if you see that the bank is performing very good, 58% plus in the growth year-on-year basis, and maintaining in the plus 34% of CASA, and 76% of the retail deposit till now. It is in very good way. We are moving on that. We are focusing on that the retail deposit and CASA deposit, which bank will be like to get more advantage to provide the credit to the customer according to our segment.
Well, that's the management of Bandhan Bank, and not quite, how do I say it, perturbed, if you will, about the talks of what could happen in the state of Assam and how Bandhan Bank could be in the center of it all. But that stock is flattish in the session. Dharmesh, we've had 2 or 3 results that have come out thus far. I mean, IndusInd Bank is one, but Bandhan Bank numbers. Yesterday we had Tata Elxsi, and of course, Infees come out already. What has stood out for you thus far in this very short span, the 3 or 4 companies that have come out?
The net profits, they all have shown a tremendous good growth in the net profits, and that is what is heartening, because if you look at the aggregates and if you talk about Nifty EPS and valuation multiples, it is where it was getting hurt. So I think if this trend of 20% plus kind of a net profit growth is maintained, it would be very heartening for the economy, and the levels where the market is trading as of now will be justified.
Yeah, but which result worked for you? Was it Tata Elxsi which worked better, or do you like what Bandhan has done as well?
See, Bandhan IndusInd Bank reported a good set of numbers, but the problem with Bandhan Bank is, and that's the fact about the business model of Bandhan Bank, it was basically a microfinance institution which has migrated to a bank. So most of its customers who are there are very vulnerable section of the society, and there is a problem in Assam and Bengal, and that is the reason why prudently the management has provided 200 crores as a provision, which is a very small amount. So I will have my fingers crossed as far as the future of, I mean, couple of quarters for Bandhan Bank is concerned, how it will be negotiated. And there is economic hardship. Let's not forget that GDP growth has been tapering down rather than going up. So the macroeconomic environment is not conducive. the demographic and the situation out there, political situation out there is also not conducive, and the state is already a vulnerable state. So it will have its share of problems, but management is maintaining a brave face as of now. So I would stay away from Bandhan Bank. IndusInd Bank, definitely, as I voiced earlier, it's a clear buy. Infosys is a avoider as of now, though they have upped their guidance and the numbers were good. But I somehow did not find that Singh going for buying Infosys from here and believing in the fact that the 25% gap between Infosys and TCS will be filled by Infosys climbing the ladder rather than TCS coming down. Tata Elxsi stands out from the IT space. That's a good buy because the segments of transportation and healthcare where they have shown a good improvement in the revenue front, that welcoming change in the segmental revenue mix of Tata Elxsi, and I think one should be buying that going forward from the IT space out of the 4 results which have been discussed, declared so far.
All right, and the next one will be Mindtree, which comes out with the numbers today. And ahead of that, yesterday as well as today, Mindtree too has been registering gains. The stock's up about 3.5%. A lot of other stocks actually moving around. You've got something like Aurobindo Pharma, which is up about 4%. Berger Paints has seen gains of 3 to 3.5%. And since we've been highlighting Tata Global, even Tata Chemical has given gains about 3 to 3.5%. Of course, they need to move in tandem because of the merger ratio as well. But let's get you some stock-specific ideas. Amar Singh, what are you betting on? Any top picks right now?
Yeah, I would say one can look at Amar Raja Batteries. This is one stock one can look at because what we are seeing in this particular stock is that on the short term as well as the intermediate term as well as the long term, the stock has broken out of a key resistance zone. And technically we are seeing a build up in momentum. And also there's been very, more than average delivery quantity also on one of the recent days. So clearly reflecting that there's a buying interest which has come in this stock, and also the stock has witnessed a change in trend after consolidating for many days. So currently it's around 760 odd levels. So any pullback in this stock towards 750, 745 levels can be used as a buying opportunity with a stop loss of 723 and a target of 784 on the upside. And the second stock to look at is Escorts. This is one stock again, I would say, was consolidating for the last 4 trading sessions. It has witnessed a good almost 10-11% up move, and we are seeing that there is further potential in this stock because the stock has broken out of a consolidation zone. And again, we're seeing an increase in the quantity as well, buying quantity, delivery quantity, as we can say. So Escorts is the other stock, so buying around 650, 655 levels with a stop loss of 631 and a target of 688 in the short term.
Okay, so 2 bets coming in from Amara Raja. And by the way, even the other battery maker, Exide, has been doing pretty well in today's trade. Sacchitanand, your top picks?
Well, I have 3 ideas, 2 from the F&O space and 1 from the cash segment. So quickly, if you look at Berger Paints right now, we have seen a fresh breakout, shaping up. If you look at the entire data set, 520 had been a stiff resistance for the stock. And if you look at last 2 months, options data, the stock was finding it very difficult to sustain above this particular level. So we have seen fresh addition of longs here, a clear-cut breakout, expecting a target somewhere close to 550 in the days forward. The stop loss for the same should be placed at 590. The second call idea on the from the F&O space is Siemens Limited. So last week we saw a spike getting registered on the weekly scale near its 20 exponential average, and we have seen that post that it has been consolidating. The stock has managed to sustain above the 1500 mark, and it is trading well close to around 1520 now. Even here, long positions should be added. Stop loss for the trade should be placed at 1508, expecting a price move towards 1550. And from the cash segment, since a lot of mid caps have been highlighted, if you look at Praj Industries, we have seen a fresh breakout getting registered. It looks like a rounding bottom kind of formation. Primarily, we expect this particular move to unfold towards 130. Trading stop losses should be placed at 112, and long position should be added in Praj Industries as well.
Okay, just want to pull up Shriram Transport. The stock was sitting with healthy gains for majority of the session. It was up 2.5 to 3%, but in the last few minutes, there's been a sudden crack which has come in. So stocks now at 1155, down 1%. Sacchitanand, on the charts, the sudden fall which has come in, does it indicate anything on the charts? Is there any breakout?
Well, both these counters go hand in hand. If you look at IndusInd Bank and Shriram Transport, both are looking more on the consolidative side. In fact, on Shriram Transport, we expect that the stock could be locked between 1100 on the lower side, and 1200, 1220 could act as a resistance. So probably we may see some more consolidation within this particular band, and let's not qualify it as a breakout or a breakdown until unless we see a closing outside this particular band. So expecting more of consolidation.
Okay, Dharmesh, before we let you go, there's quite a bit of traction that we're seeing in select consumption-based names. I know you've been bullish in the past, but I'm wondering if you have any thoughts on the kind of surge that we're seeing, for example, in Tata Global Beverages, the way we're seeing in Westlife, not Westside, Westlife, for example. These stocks have run. Tata Global is on the roll altogether, but some of the others too have done well.
Yeah, as far as Tata Global Beverages are concerned, I think there's some corporate action. That's the buzz going around. That is the reason why traction has been there. Otherwise, if you leave that aside, I don't see any business traction which can propel such a big move in such a short span of time. So the congestion theme, I think now it's the time when you should look at booking out of all these stocks. So as a strategy, what we have been advising our clients of late, I mean a few days back onwards, is to start booking profits on all the consumption names, and if the budget goes in a desired way, then it would be cyclicals like banking, infra, cement and metals, where the focus will shift along with automobiles and auto ancillary. So these things will work more, and as a strategy, one should be booking out from like Hindustan Unilever, Dawers, Asian Paint, Tata Global Beverages, Tata Chemicals and all. This is the basket where one should be looking out to book profits now, because valuations have gone way too high.
Okay, valuation of these FMCG companies historically have been trading at the higher level. But Dharmesh, we leave it on that note. Thanks a lot for joining us and taking us through your views on some of these stocks. But on that note, we're, by the way, inching very closer to the mark of 12,400 as well. So keep an eye on Nifty. But for the time being, let's also focus on the Fab4 stock. Sharad Dubey joins us with his list. Hi, Sharad. Good afternoon.
Good afternoon, Navneet. The first stock is TV18 Broadcast. The stock is up more than 10% and the biggest gain in the Nifty 500 index after it came out with a good set of operational numbers. The margins increased by more than 1,000 basis points to 19.7%, and the EBITDA rose by almost 2.5 times to almost 280 crore rupees. This was aided by lower operational costs and also lower employee costs. Up next is Tata Global Beverages, which we are talking. The stock is up almost 11% today, and this is because of the fresh longs we're seeing with a high open interest of more than 75%, and the volumes are trading almost 12 times its 20-day average. The stock has risen almost 21% in the last 6 trading sessions, so that is something which you'll be watching out for. Up next is India Cements, which is up almost 7.7% after it was reported in the exchanges that Radhakrishnan Damani has actually increased his stake, from 1.3% to 4.7% stake for the December quarter. And the last stock of the day is Deepak Fertilizers, which is up almost 5% after the company stated in its press release that it has sold its plot of land for almost 99.2 crores in Dahej itself. So this is a part of its asset monetization strategy. Back to you.
Well, thanks a lot for that, Sharad. Yes, indeed, some of these stocks have done exceptionally well, and cement in particular is just so much the flavor of the season. We've seen a clutch of others do well, but Sacchitanand, the last few days, you have to admit, the other one which has done remarkably well is India Cements. Now, how does it stack up vis-a some of the other cement charts, and would you be a buyer here?
Well, if you look at India Cements, the move has relatively not begun. In fact, it is still at the base of the entire consolidation band. If you ask me, taking a bet, probably yes, I would like to place my bets on India Cement right now. The stock is, about to see momentum. It has managed to, cross its 200-day exponential moving average after a while for the first time, and the volumes have been exciting. So the stop loss for the trade should be clearly placed at 82 on a closing basis, and some longs could be added here. Probably we may see that, since there had been underperformance, we may see, the stock outperforming in next couple of weeks, and probably we may see this particular rally getting extended towards say 9800 kind of a zone. So I think of all the cement packs, most of them have rallied, but I think it's a good time wherein India Cements can be traded. But clearly, it has been an underperformer, so maybe these could be the final legs into the cement rally.
What a move though for India Cements on the last 4 or 5 days. 6 constant days of gains, and that's true for the cement pack at large. Remember, yesterday Amrit was talking about ACC and Ambuja having this valuation benefit compared to the others. But I think a clutch of these other names which had not moved at all in the last few have done well. Haven't quite seen the buzz in some of the other performing cement names, but there's certainly been some value hunting at the bottom end of the pack. Mridul Jalan of Senora Advisors joins us right now on the show with his thoughts on the fundamentals. Mridul, good having you. Thanks for joining in. What has your stance been on cement, and were you guys buyers in the recent weakness that we saw in 2019, and what's your belief now?
So we were buyers in Sri Cement and Ultratech. We didn't really look at other names. Was just following the discussion you guys were having. What we are seeing in cement, especially the south names, where India Cement is catching up, is predominantly driven by the price hike we saw in the south, especially in Andhra. Now, that's one state which kind of leads the south in per se. And if you look at the south heavy players, they are the ones who have outperformed, especially those in the futures and with a higher beta. The reason is the way the Nifty has outperformed has got a lot of people on the back foot. The one way to play that, to participate, is through mid caps and small caps and higher beta name. And India Cements is massively under-owned. There could be some short covering because of the futures, and which is why you are seeing this kind of participation. My sense is, in terms of structural earnings, we would be more bullish on Ultratech and Sri Cement, and obviously ACC Ambuja is something which one looks at. So we stick to large caps, and yes, we were buyers in some cement names.
Still holding on to Sri and Ultra?
Yes.
Okay. That's the call on the cement space, and besides that, just want to highlight even stocks like Britannia now, one of the top gainers on Nifty, is up about 2%, ITC, Nestle, all of them have started to inch higher. So Nifty FMCG index is one of your top sectoral gainers right now, and besides that, metals is something which has been gaining traction right since the last 2 or 3 months. Mridul, have you entered into any of these steel or non-ferrous space as well?
No, not on the investment
You don't
side.
see the cycle turning since the price hikes have been announced for the third
Yeah, we are bullish on the metal space, but we typically don't invest in metals because they are cyclicals in the nature. And as we spoke to when we came last time, that we are very bullish on the global risk on part. Metals is one of the proxies to play that. What is tough to garner there is which companies will benefit from what regulation. We saw what happened on the Odisha side. We saw what happened with NMDC a couple of days back, right? We saw what happened with JSPL on their oil, iron ore reserves. So because of these regulatory things, we really don't look at that sector. But I can tell you what we really like in this sector is Tata Steel. If I have to buy one stock, it will be Tata Steel.
You wouldn't buy it, but if you were to buy, you'd buy Tata Steel.
Yes.
Why so?
Two things. One is the quality of the management, market leader. And the second is it's a more of a global, not only India play. And hence the regulatory risk for this name is slightly lower. And it's a backward integrated, which means the iron ore prices, which is going up globally, will not impact it. And the last part, which is the most important part, if you read the latest China news, where they have said the new green plants will not come out, which means the global steel prices will remain good. Tata Steel and Chorus will be big beneficiary of it.
Okay, well, that's also a thought, and let's see, Tata Steel, if at all Senora would go out and buy, they would buy into Tata Steel. There is some traction that off late, the last 2 or 3 sessions we are starting to see in the staples names. Now we spoke about Tata Global earlier, that's separate. But even the pure play staples, Britannia 2 or 3 days on a trot has done well. HUL was doing very well until trade yesterday as well. These are expensive names we know, but would you continue owning them or maybe even put fresh money into them? FMCG strictly?
So within the FMCG, within this consumer names, we really like all these names, we track all these names. these are good stocks to own because in lead up to budget, what is happening, Neeraj, here is a lot of expectation is related to personal tax cut, something which media and around has been talking about for last 4 months.
The ministry also has
exactly, which is what I'm saying, which is what a buzz around has been. Now with that being the case, the first impact will come on these staples, which is why you're seeing this catch up ahead of the budget. The second part is these are the ones where the cash flows and the earnings are relatively stable. At these kind of index level, I want to balance it with beta and consistency both. What we recently added is Page Industries within this space, which has corrected some 40% from the top. There's been some stiff competition there. From whatever we could do our research and analysis, we really liked it from this perspective. It's not a short-term play for us. We do like Britannia. We do look at Britannia at around 2,800. It's still a good buy, but we don't hold it. That's the disclaimer.
Okay. Page Industries, by the way, is doing quite well. Yesterday, I remember it was down, but it's recovered, and today it's trading pretty close to those levels of not yet at 24, but 23,922 thereabouts. We'll have Balkrishna Industries, the tire maker, which has been doing well. In fact, the stock's been up and about for the last few days. It's also touched its 52-week high. And remember, the crude prices have cooled off, and now they're at 4 or 5 week low, which augurs well for these tire makers as well. Balkrishna at about 3.5%. The futures will tell you there are some long positions being taken as the open interest too has gone up by about 14 to 15%. Amar Singh, coming on charts for Balkrishna Industries, though the futures traded a discount of 3 to 3.5 rupees, but would you take a bet here on the upside at current levels?
Yeah, I would say looking at Balkrishna Industries, the short-term trend definitely it has gained in momentum, and also what we are seeing is that earlier the stock was unable to breach the 1,000 mark. So which it has decisively for the last three to four trading sessions. And technically, if you look at it, even on the weekly charts, the stock is strong. On the long-term charts also, the stock continues to be positive. So not at the current levels, but yes, any dip in the stock towards 1,040 odd levels can be used as a buying opportunity, because the stock now has got very strong support coming out of 1,020 odd levels. So yes, on dips, one can look at buying Balkrishna Industries.
Okay, and even Colgate, which was up yesterday, there was both cash-based as well as buying on future side, long position. That continues today as well. Colgate is up another 1% to 1.5%, but over and above that, Aurobindo Pharma is up about 4%, so that's also having a good session. Sacchitanand, on the charts, any trading call for Aurobindo, which is up about 4%?
Well, I think the stock has already run up by almost 5%, and if you look at the entire structure, what we are observing is that if you look at 15-minute chart, there is a divergence which is getting created. So I would not be in a position to create any fresh long positions. Probably we may see some cool off in the counter. So in case if someone is holding on to any longs, I think the trailing stop loss should be strictly placed at 477.
Okay, that's Aurobindo for you, and just want to highlight IndusInd again because it's in focus. The stock's now at the lowest point of the day. It's down about 4%, and a couple of other heavyweights, also Reliance and SBI, are sitting with some bit of losses. Anything interesting that you guys have been researching, Mridul, that you're looking to add right now?
It's tough to add at these nifty levels.
Not nifty, it can be outside.
Yeah, which is what I'm saying. At these levels, it's tough to add. We are sticking to our old names. We are deploying money very slowly at this point of time, especially with budget coming in.
So no tactical bets ahead of the budget?
No, nothing as such. Because the levels are slightly worrisome. We still remain quite bullish for the year, but we'll wait for a correction to add aggressively.
Okay. All right. So that's, I think Mridul will wait for the budget to make any fresh bets. But let's check what the dealing rooms have been recommending, at least in today's trade, as we make new highs today as well for Nifty and Sensex. Let's go across to Darshan Mehta to find out what his channel checks have been suggesting. Hi Darshan, good afternoon.
Hi Nonit, one of the stocks that's been spoken actively today is Page Industries, for a stock which is almost 25,000. Decent volumes today, almost 55,000 shares have been traded. It's up almost 3%. It's come off the day's high, but nevertheless, the delivery volumes over the past few days are strong. Today also it's up on heavy volume. So there is definitely some cooking in the counter. The trend seems to be on the positive side. The traction towards consumer is much more, even if you look at the website, they've totally revamped it, trying to get in more attention and sales. So Page Industries is something that dealers are clearly talking about today. The other one is Colgate. It's up 1.6%. This time around, the buzz, I don't know where the results is, but the expectation this time around from Colgate is extremely strong set of numbers, especially volume growth. So the market chatter does indicate it could be double-digit volume growth that could come in for Colgate versus the expectation of a single-digit growth. So Colgate is active in today's trade. Gati is the last one that dealers are talking about. Hasn't moved much. It's flat in today's trade or slightly down. But dealers indicate that at lower levels, there is a little bit of buying that's happening on the counter. The volumes is decent. Almost 1 million shares have been traded on Gati. So that is something that dealers indicate that they are watching out for.
Oh, interesting set of names, a couple of consumption names. Darshan, thanks so much for bringing those. Very interesting to see what those volume growth numbers for Colgate could turn out to be. Remember, the management is on record now saying that even if it comes at the cost of margins, they'll go in for volume growth. That's a change that Colgate-Palmolive is doing. Some other companies have done that in the past and met with good results. Let's see if Colgate manages to do that. Nestle was a case in point when it came to chocolates a few years back when they lost market share and then came back and focused on volume growth. But well, Darshan spoke about Page. I think Mridul just briefly spoke about having added Page, if I'm not wrong. Now, what is the rationale out there, Mridul?
So a couple of points. One is they have been struggling on the market share and volume growth part for a couple of quarters now, which is why the stock has corrected. I think it was at higher end around 80 times PE. From there, it's now at around 50 times. Now, what we see is those challenges were because of the new launches by the competition and everything, which is quite natural for the initial part. If you look at the management confidence over the last two con calls, it gave us the confidence that they are back on the track. A lot of problems probably happened because of the liquidity which happened in the system in the terms of the channel and everything. That has been taken care of. We believe the process of losing market share for Page is now over. And if that's the case, then at 45-50 times 1 year forward earning, we find it attractive. So the risk reward was very good for us in Page, and that's what compelled us to buy it at around 22,500 or something. It's already up 7-8% from there. But yes, we are still a buyer at these prices.
Yeah, well, a lot of believers are, because a lot of believers believe that Page as a brand, Jockey as a brand which has stayed so relevant in the mother market for so many years, cannot really just have a 20-year cycle, and maybe there is more in store. So let's wait and watch.
Just one important data point. During this festive season, when there was discounts all around Palladium, Phoenix and everywhere, one shop which never had a discount.
But they anyways don't. Yeah, they anyways don't.
Which shows that they are not desperate.
Yeah, sure.
Which means that they are probably doing well.
Yeah, well, maybe that's true as well, but let's wait and watch. Navneet, by the way, just a couple of things and just a couple of moves. Navneet was speaking about IndusInd Bank, and that's now at 1478, which means it's trading at the lowest point of the day. I think we took a chart check, but maybe it's worthwhile revisiting that chart check too, because of IndusInd Bank doing what it's doing now. 1478 is a sharp drop from the highs of the day, almost 100 points shaved off.
That's right, Neeraj. In fact, I just want to check with Sacchitanand first, because the stock was up and about yesterday. If somebody has been holding long positions of yesterday, what would your advice be now? What are the key levels that you're monitoring on the charts?
Well, the key band, remains at 1450 on the lower side. We are expecting that that support should not get violated soon. And on the higher side, 1600 still remains as a resistance. So, this particular band should continue. There are no, major breakdown or breakout chances. So probably we may see this stock oscillating here. So the right strategy would be to, buy the declines somewhere close to the support levels. So I would recommend, in case if we see further slippages towards say 1460, 1465, I think that will be an ideal zone wherein a contra trade should be deployed. The stop loss for the trade should be placed at 1440. 40, and some longs can be added since it is now quoting very close to the lower end. So I'm expecting that the stock should, consolidate within this particular range for next couple of weeks.
Okay, so do watch out for this name in the session today. Now, might as well take in closing strategies as well before we talk any further. So let's try and nail it with one top closing strategy from both our experts. Amar, I'll come to you first. Your top closing strategy.
Yeah, I would say one can look at HCL Technologies. This is one stock overall technically if you look at on the charts, it continues to be strong on various time frames, and today also the stock is up. And what we are seeing is that the stock is moving out of a consolidation. It has moved out, I would say, from almost 570-75 levels. It's trading around 590 plus. So this is one stock. Any dip or correction towards 580 ideally can be used as a buying opportunity with a stop loss below 560 and a target of 610 on the upside.
Okay, so that's the top call from Amar. HCL Technologies, the results coming out later this week. In the run up to that, maybe could be some traction there. What about you, Sacchitanand, your top call?
Well, we have discussed Berger Paints as we have also deployed it in the BTST kind of a category. But since we were discussing Kolpal, I think the chart structure and the data is interesting here. In fact, it is quoting confidently above the 1500 mark. So I think some longs should be initiated here. The stop loss for the trade should be at 1495, and there could be a expectation of a move towards say 1550, 1565, this kind of a zone. So probably Kolpal can be a good BTST or a carry forward trade. 1495 should be the stop loss.
Okay, watch out for Kolpal, 1504 and counting. Do watch out for that one too. What else? I'm trying to look at stocks which are trading at 52-week highs, and that includes one Tata Global Beverages. Yes, there is, I think Godfrey Phillips has inched up a bit, so do watch out for that one. Nesco is doing very well for itself too, so that's the other one that you need to monitor in the session today. Any fundamental thoughts on Nesco? It's a stock that a lot of people have off late come in.
We don't look at.
Okay.
Sorry.
No, completely fine. Between those 2 or 3 names which are in the mid-cap IT space which are in focus, Mindtree, Results Day, Tata Elxsi, which came out with numbers, and NIT Tech, which is trading at fresh highs. Any coverage?
We don't track them closely. We do monitor them. Now, what we believe out of these numbers is a lot of, like Tata Elxsi, we do track a bit. Is something where it's a mid-cap IT with a focus on the auto segment per se. If you look at it, last 5-6 months have been better for auto segment than what was feared. Part of that would have got reflected in terms of better revenue visibility for them. In terms of Mindtree has different segments than Tata Elxsi. The way it works with each of these mid-cap IT is they focus on different segments. While they might move in tandem in terms of fundamentals, it is based on which segment is doing what.
Sure.
In terms of IT, we really don't invest in structurally in IT. But if I have to pick something for a trading at this point of time, I will agree with HCL Tech there. I think they have been giving good numbers for last 2 quarters, and the stock has been inching up slowly. If they deliver good organic growth this quarter, 625, 650 range could be possible for them.
Okay, some uptick in Sterlite Tech ahead of its numbers. I think it's up 2% at 130. Let's wait and watch. The numbers are slated, I think, to come out tomorrow, if I'm not wrong. Could be mistaken, but do watch out for that one. So that's that one stock which has gained quite a bit and a sharp uptick there. The other one at the at the broader end of the spectrum, I want to look at mid caps and the small caps first, is Ipca Labs, which has gained about 3% and some bit of jump coming in the last few minutes of trade. Any technical thoughts out here, Amar Singh? Sterlite Tech, for example.
Yeah, looking at Sterlite Technologies, what we are seeing here is that the stock has moved out of a consolidation, and it needs to consistently trade above 130, 135 odd levels, because the stock definitely has formed a very strong base. Consistently trading above 130, 135 levels, the stock has a potential to rally towards 145, 150 levels.
Okay. Mridul, if somebody is looking at the asset management space right now, you know that there is a multi-year growth trajectory, but the stocks have rallied quite a bit and therefore are expensive. What kind of time horizon do you need with an assumption that the earnings trajectory might be consistent for it to justify buying an HDFC AMC or an RNAM for that matter at the current valuation?
So two things are very important to understand. One is the quality of the earnings, not only the numbers, how the numbers are coming. If the numbers are coming on the basis of a consistent growth, broad-based growth, then a valuation of 40-50 times is also justified if the cash flows matches, which is what is happening with the kind of names which are trading at these valuations. What will happen is these guys will continue to trade at these premium valuations unless there is a change in the quality of the earnings. So the fundamental call we take is not only in terms of what the growth will be, how the growth will come.
How is the quality here?
So for me, the quality of HDFC, AMC or RNAM is quite steady in the nature because their clients are masses in number. And if you look at it, their earnings have not been linked to market conditions, which is even in the bad market, they have continued to grow and they have continued to earn well, which gives a stability to the earnings. The moment that happens, the multiple typically goes up. And which is why HDFC AMC will continue to trend. The other aspect which is very important to understand is these companies don't need to dilute.
Yeah.
Which means the holders which want to buy for 3 years, 5 years, they will have no option but to buy from market. To cut your answer in short, I'll have to at least look at 3 years earning and quality of it. I'm not saying anything, but if you look at HDFC Limited, while it's trading at near highs, it has not given a similar kind of a return as other quality market leaders have. The reason is very simple. HDFC Limited hasn't done well in their core earnings, which is what we try and differentiate when we look at a stock. Besides multiple, where the core earning is coming from. And the other thing which do to kind of insulate us from the volatility is we believe in deploying over a period of time.
Sure.
We don't buy everything up front. We recommend our clients to add slowly, to deploy the capital slowly so that you participate at every level.
Yeah, well, and that might be showing in the way some of these stocks could be doing as well. But take a moment to thank you, Mridul, for joining in today. Lovely having you and see you more often.
My pleasure. Thank you.
Okay, now 2 or 3 things, couple of stocks. Now, Amar, I want to come to you first and then I'll come to Sacchitanand for a call that he has. But Amar, very quickly, since we're talking about the HDFC family, HDFC Life has corrected today, down about a couple of percentage points. Would you trade this one on the short or the long side or something like that?
I would say I would rather avoid HDFC Life because technically if you look on the daily charts, the stock has been displaying, I would say, a sideways trend. And it's unable to breach the 640 level, whereas on the downside it has got support around 600, 610, but I would rather avoid the stock currently.
Sacchitanand, I want to ask you about a stock, but firstly, very quickly, 30 seconds each. First, your call. I think you have a call on BEML.
Yes, the call is on BEML. In fact, there's an interesting data set now. If you look at the recent history, the stock rebounded from its 200-day exponential moving average, and if you look at both the daily and the weekly RSI are quoting above 55. It has been consolidating for almost 10 weeks. So probably we may see this momentum getting generated here. 1050 would be the target for this particular trade, and the stop loss should be placed at 985, and long should be deployed in BEML.
Okay, the Network 18 group, Sacchitanand, TV18, Network 18, stocks have been gaining. Any thoughts here, very quickly?
Well, I think purely from a momentum perspective, one can chase them, but 26.5 should be the stop loss for the trade. It was the breakout point, and if you look at the entire accumulation pattern, it suggests a target price of somewhere close to 32.5. So in case if someone wants to really carry forward this particular trade, then 26.5 should be the stop loss, and 32.5, 33 should be the review zone.
Okay, gentlemen, stay on. We'll take in closing thoughts from you, but I must say we're not ending all that poorly in the session today. It's not a bad close. The Bank Nifty is not at the lows of the day, neither are the Sensex and the Nifty. So good close, you would have to say. 0.25% in the green is something that I think we would take. The mid-cap and the small-cap indices will also come up on your screen. The market has stayed positive throughout and true to their nature. I think they're doing very well in the month of January, the mid-caps and the small-caps, and we'll talk about them as well. But first, the large-cap space and what's moved and what's not on the index. Vedanta up 4%, Britannia second in a trot up 2.5%, Hero MotoCorp finally sees buying there. It's undervalued compared to the others like Bajaj Auto, etc., and doing well. ITC, Britannia, Nestle just shows the nature of the gains. FMCG and technology, HCL Tech was right here, but I think it's doing very well in the run-up to the results as well, so do watch out for that one too. What's not done well? Two stocks, one in shambles really. Yes Bank, the last 4 or 5 sessions has corrected, but IndusInd Bank down about 4% post its numbers too. UPL is corrected 1%, Reliance Industries and SBI down, Kotak Bank down about 1%, Tata Motors has lost out some little bit, and Adani Port corrects a little bit in the session today. But the standout performer of the day has to be IndusInd Bank, down about 4%. Yes Bank has stayed low, but IndusInd Bank posts the numbers, correcting quite viciously. What about the broader end of the spectrum? That's the other point that I want to make here. And let's get in the mid-cap and the small-cap indices on your screen to try and tell you what's moved and what's not. So should come up on your screen, the mid-cap index. Tata Global Beverage is the clear winner here, up about 10%. There is strength in Godrej Agrovet, down up about 4%. V-Guard and Balkrishna Industries gain. Escorts gains a bit, very interesting move here today. And IPCA shot up in the last few minutes of trade. So really strong show by IPCA as well. Exide was amongst the other ones, and Sterlite Tech 3% ahead of the numbers tomorrow. I wonder if the numbers are going to spring a positive surprise. PNB Housing corrects a little bit. I think the one worth mentioning is JSPL, down about 2.5% today on a day when metal stocks were arguably believed to do well, and the large cap metal companies have done well. And Edelweiss continues to languish, down about 2.5%. The small cap space, and let's get those stocks up on the screen. TV18 Broadcast, the one I was talking about, up about 15%. Avanti Feeds up 6%. Trident is up about 3.5%. Spark is up about 3% as well. What's not doing well? Spandana Spurti down about 2.5%. Rain down about 2.5%. And Delta Corp results reaction down about 3% in trade. And then there were a clutch of other names which moved around quite a bit in the session today and had some very pronounced moves, which we've of course spoken to our experts about. TV18, for example, up about 14 or 15% in trade. Page Industries and some of the others too had a decent outing. But final questions to our experts. And Sacchitanand, I'll come back to you first. With the kind of close that we've had today, what's the near term for either the Nifty or the Nifty Bank? What levels would you watch out for?
Well, as we discussed, if you look at the spot data, it is somewhere close to 360. So in the near term, we're expecting that this particular swing should extend towards 395, like 400 to 460. And probably, there, one needs to review their strategies. But when it comes to Bank Nifty, clearly, we still have a lot of room on the upside. Probably we may see a move towards, say, 32,500, 600 going forward. So until unless 32,000 holds on the lower side, the probability of this case scenario remains valid.
Okay. Amar, while I would love to have an index view, but I'm intrigued about the kind of moves that we've seen a couple of these names, and that's why would want your thoughts on specific stocks today for a change. One of them which had a move in the last few minutes of trade, which is Sterlite Technologies, a view there ahead of the results tomorrow. The other one is Mindtree, which on a results day has done, well, reasonably okay, up about 2.5%.
Yeah, I would say Sterlite Technologies is positive on the charts. So yes, there is a potential that once the stock manages to sustain about 134, 35 odd levels, it has a potential to rally towards 145, 150 levels. And the second stock which you talked about, Mindtree. If you look at this stock is definitely on a roll, and the stock continues to trade positive, but these are not levels I would say to enter long. Because on the short term, it's in overheated territory. So only on corrections one can look at entering the stock. The stock has got now good support coming around 840 odd levels, whereas on the upside resistance is seen around 885.
Okay, Jamin, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your thoughts. Before we wrap up, just a quick snap out, or rather pull out, you want to pull up the advanced decline ratio and the volumes, if we can pull up on them on the screen. And then just a quick snapshot of what the world is doing as we shut shop. This is the market breadth, which was positive for better part of the trading day today. So ends positively, which is great. The volumes will come up on your screen. I think we did reasonably okay on the cash side as well as on the F&O volumes, but cash side in particular, 35,000 crores is nothing to scoff at. And then what Europe and US markets are doing, Dow futures as well as the European markets. Europe is a mixed bag, nothing to write home about. Dow futures after a big rally yesterday, especially for the S&P and the Nasdaq. Let's see what the Dow futures are doing right now. They were a bit subdued compared to the S&P and the Nasdaq. Flattish for now. Let's wait and watch in the build up to the big day tomorrow for the US markets and the world markets at large because of the signing of the deal. It'll be interesting to see what these markets do tonight. So we'll keep an eye out for that. But no negatives as we speak. So maybe tomorrow would be yet another day of continuation of the trend. But it's a wrap on this edition of Countdown from all of us to put this show together. Thanks so much for watching. But stay tuned. We'll wrap up the day's action on BloombergQuint's Market Wrap coming up next.